Good morning everybody, welcome to Stockradar Stocks in the Move for another week. Today is dated the 8th of May 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, it's another interesting week in the market this week. Some more strength has been going through. See if this can be maintained. We're sort of mid-range between highs and lows at the moment, so we're sort of in an interesting period at the moment. Today I want to talk a little bit about my Trend Intensity Indicator, which has been a reliable guide for many years for me, and I'll go through the construction of the indicator and the benefits of it a bit later on. Okay, but firstly I want to get to our Trend Intensity ratings for the week. And we'll see what we've got here. Okay, so we lost a few of the miners last week because they pulled back a bit, but they have recovered a bit, and we'll look at a few of those a bit later on. But firstly, we've got Eagers Automotive at the top there, ASX, Bank of Queensland, CBA was broken up again, Coles is doing well, Medibank continues higher. Stockland did break up last week, Sol, Patterson also. We've got Telstra, which is doing really well, as is Wesfarmers making new highs. So there's a good batch of stocks there in the Trend Intensity ratings there that are all doing pretty well. As we know, if we look at our stock pick count, we still don't have a lot, so the breadth is bad, but it's all okay. We've got 4 new stocks this week. Actually, we had 5 in and 1 out this week. So we've got 30 stocks of 158 at the moment. Still pretty low, but we're picking up a few there, which is interesting, and 3 ETFs of 26. Okay, so now I want to get into the overseas markets. Again, as I said before, there's been a bit of strength back in the market here. We're recovering a bit. Pressure is still down. We're still at the lower high, lower low scenario. We're getting some big volumes going through here. Big selling volumes here, but also, if I just wind this up a little bit, we've seen a bit of volume come through on the buy side here, recovering a bit. So we've got a little bit of work to get through some resistance here in the Dow, but it is trying to move higher at the moment. Similar picture on the Nasdaq, seeing a bit of a rally. We had a little bit of volume there. We've got some big volumes going through in this whole pattern at the moment, which means there's plenty of two-way traffic going on here. But as the index has come down over the last month or two, the pressure's still down, and the sellers are still in control of the market at this stage. Okay, and momentum is still very weak on those markets. And the S&P, pretty well the same picture. Pressure down, it's recovering. It's got up to this level here, which may provide a bit of resistance. We can see the volumes here. We can see the selling volumes, and now the buying volumes come back in. So it's just really hard to know what's going to happen. And in this sort of situation, you have no trend, so I can't really say either way which way the market's going to go. Apart from the pressure is probably still down there, and the momentum you see is very weak there. So not a lot of upside pressure there. It is rallying at the moment, but we'll just see if this can be sustained. Okay, we go across to our market, which has actually done reasonably well. Again, we get the little gold and mining, which has probably helped us a little bit, as opposed to the techie balance in America. So we've recovered quite well here. Again, we're still mid-range at the moment, between those highs and lows, so it's pretty hard to know where we're going to go at the moment. It may range trade for a bit. It may rally up and take out the highs, I don't know. It may collapse and go back to the lows. So it's a difficult situation to analyse on a price behaviour at the moment. Okay, we've got gold, which again had a little bit of selling hit the market. We saw a bit of volume go through here. Didn't really dent the price too much. It's back up making new highs at the moment, and our gold stocks are responding to that pretty well. So the gold's okay. Copper's sitting below the highs still. It's still, I think there's probably pretty good support. It's not as if it's sort of dropping off pretty quickly. And we saw that big retreat from the highs there a while ago, but it's recovered a bit, still challenging those highs, not got through. The bigger picture is bullish, as we know, but we just have to be a little bit patient with Dr. Copper to see if we can get any moves there. Not a lot of volume going through here. The momentum is still in positive territory, so if you were to run a trend intensity rating over this, you'd probably get a 0 value, maybe a +1, probably something like that. Brent crude, well, it's a -10, I would think. It's just going down. We saw this big level which held for so long, for a couple of years there, which has finally given way there. So we're seeing some selling dominate the crude market at the moment. So that pressure is down there. Okay, so now we're going to go to a few stocks, and I think, in difficult times, you can buy risky stocks if you want, ones that are dropping and you think there's good value, or you can just stick with your trends, which is what I do. Okay, so there are some trending stocks there. There's enough for me to have a good amount of stocks in a portfolio, a 5 stock or a 10 stock. So that's where I stay. I stay in that area where I follow my trends, which are stocks that are rising. Odds are it's going to be higher next week than it is this week, and that will be true in most of those cases, as opposed to the stocks that have dropped a lot, and people think there's a bit bit of value there. Maybe there is, but I'll prefer to wait till I get a reversal pattern off those lows before I buy some of those stocks. Okay, so let's go through ones we've got. Just a couple I want to recap on. I mean, Medibank Private's just been an amazing stock since it's broken higher. It's really kicked up from about 370 September last year to May this year. We're up around 470. So we've come up quite a bit, and Medibank Private's done very well. And all we're doing is simply lifting our stop, not worrying about what else is going on in the world. If I just focus on this alone, then it's a good stock to be in because it's rising. Okay, so Medibank Private's been a good performer for us. Charter Hall, we know, continues high. Some of those property stocks, we've got Stockland breaking up. We've got Charter Hall making new highs here. So there's a couple of them that are doing quite well there, and they've got a good bit of support. So these are the ones that we follow, not the ones that are going sideways to down. And Charter Hall, trend intensity rating of 9 there. The price is up. It's sitting, you can see, sitting nicely above the moving average, which is providing some nice support for the pullbacks. And we've got volume here, which is a little bit mixed, a bit thin. We've got very positive indicators, so very positive momentum. So 3 out of the 5 areas are very positive, giving us a rating of 9. Volume's just a little bit mixed there, which is just tempering our trend intensity a little bit there, which is fair enough. But the perspective we get from this is an uptrend supported by the indicators. Okay, so that's Charter Hall. Transurban we looked at last week. I think this is an interesting stock because it is now starting to find some support. We're just seeing a change in here, not just also the pattern, it's still within that trading range. But we have seen a bit of a reversal pattern occur here over the last 12 months or 13 months with some good higher lows here. We've also recently seen some very good volume, which has taken the price from $12 up to around $14, just above $14. So now we're really looking for this challenge to $15.30, $15 up here to see if we can get through, because we have that huge trading range that if it does break out of there, then that's a very good sign for a new high and a continuation of the trend. Classical technical analysis, which is what I use most of the time anyway. So that's, and you can see the momentum indicator is also very positive here. So the indicators are ripe and ready to confirm any move higher. As I said to you before, last week, I think the aggressive may want to buy it here, a little trend reversal. I'm going to wait for the break of this big trading range before I get too excited and approach this one. Okay, so that's Transurban. That's 3 stocks we looked at last week. It's going to go back to a few of these metal stocks which we've looked at recently. We saw a bit of a pullback in a few of them, but they've done pretty well. And they've recovered this week. So we saw the pullback here, came back to around our stop level here, held pretty well. Let me just get this up a little bit so you can see the volume's been very heavy, and even more recently we've seen some very heavy volume here. Not a lot of selling in here at the moment. Momentum is still good. It's still above the average, holding this uptrend of higher highs and higher lows. So it really is a situation, one of these stocks that's trending higher. Trend intensity rating is 8. It's just come off the board a little bit there, but that's okay. That's a very strong rating. So Genesis Minerals is still looking very good. Evolution Mining, which is really in the gold spot, is looking exceptionally good. We may see it make a new high again today, but it's all these indicators here, moving average, volume, and momentum, all looking very strong here. So we just manage this trade with a stop. If it goes up, we'd raise our stop. It's a simple process of that, of following a trend and raising the stop. So trend intensity rating for Evolution is 9. Just taking the frost off the top there, not a bad thing when a market that's rising. We have pullbacks every now and then, allowing more buyers to get in, and the sellers just to test the water and see how strong the buyers are. And in this case, the buyers are strong and they're pushing it back up towards those highs again. So Evolution's still holding its uptrend there, and we're just raising our stop in this one behind the price rise. Okay, Capricorn Minerals is another one of those ones which has done very well for us. We had a new high back here. It's now again, we've seen this pullback here, a bit of a fright for us all, because we know what these miners can do sometimes. They can come back very sharply. But we've seen some very, very good volume, a bit like Genesis. Some really strong volumes we've gone through here recently, which is still very, very good support for the stock. Okay, so that's why we saw that red bar there and that move down there. There wasn't a huge amount of selling, Price did come back a bit, which is always a bit of a worry, but we've seen the buyers come back in and hold this up. So the momentum indicator is still very strong here. As this is the volume, it's above the moving average and the price is rising. We just had a little bit taken off the top here because we pulled back a little bit there. So trend intensity rating of 8, and we're just simply lifting our stop at the moment. Okay, so that's the miners there. They're looking okay at the moment. The trends are okay for the ones we hold. A lot of the ones we don't hold, like the BHPs, Rios, Fortescues, all those ones that aren't doing so well, but there are some minnows that are doing a lot better. Now we can cross over to some of the more safer industrial stocks. A couple of them are doing pretty well. QBE's done well for a long time. And it's still rising. I mean, it's having a bit of a correction phase at the moment, but it is holding very well. And we've seen this before. You can have these jumps, pullbacks, and then up it goes again. And really, over the longer term, this has risen pretty well for quite some time, as you can see there. So we sort of hold this one. You know, this move down here was whipped up pretty quickly. So really, there's no real concern there. Just a little bit of a corrective phase we're going through. Trend intensity rating is still +9. So all the volume patterns, momentum patterns are all pretty good. This has eased off a little bit, but it's still well above zero, so it's getting a positive rating. And I'm going to through how this work a little bit in my trading tactics today. And again, Brambles is a similar situation. Fairly enduring support for the stock. It's making a new high at the moment, or just trying to make a new high. Trend intensity rating is 9. You've got a nice little support line through here. It's come back to the average, found support. Volumes have been good. We've had a little bit of selling here on this move here, so it didn't really affect too much. This has drifted off a little bit. It's really just saying that the strength of this trend, the strength has come off a little bit. So although we're still rising, we're rising at a slower pace, which is what the momentum indicator reading says, because it's still above zero, so it's still positive. It's just going at a slower pace than what it did. And this was really quite a sharp rise initially here back late last year. Okay, so Brambles looks okay. There's a couple of good industrials there that we're looking at. Okay, cost of the consumer discretionary stocks, and well, JB Hi-Fi, you know we have our pattern when we get stopped out. We have those three options of downtrend. It can go back to downtrend, it can go sideways, it can go back up again. This one tried to go down and then tried to go sideways, and it was just eventually the buyers would just come back and they pushed it back up to new highs again. So the outcome is looking like a new high and the continuation of the uptrend at the moment. Volumes have been okay. Momentum's also positive. It's slowed, of course, but it's still above zero again, which is still positive. So it gives me a positive reading towards my trend intensity rating there. So it's now trend intensity rating of 9. It's moved to a higher high. It's above the average. Volume is okay without being extraordinary. Momentum is okay and positive. So we're getting a rating of 9, which is okay. All right, so that's JB Hi-Fi. The other consumer discretionary stock has been Harvey Norman. A little bit thin on the volume side here, but we quite like the advances. We've seen a good sort of corrective pattern through here. It broke higher, came back a little bit, which worried us a little bit, but it did hold above our stop, and now it's going to challenge those highs again. So it's looking interesting, and if we look at this one a little bit more history here, you can just see back up here, up R2, $596 is where the high is at the moment. As I said before, I mean, the trend intensity rating is +8. The higher highs, higher lows continue. A little bit jagged in parts of there, but it has continued there. It's above the average and finding some support for the average. Volume's a bit thin, which is a little bit of a worry. And momentum is positive and just sparking higher again at the moment. So we do get a good rating, but we just watch it. And as long as we've got our stop in place, it keeps us reasonably safe from any big hits to our equity. So that's how we always play it anyway, keeping our risk nice and low. So Harvey Norman looks okay to me. Okay, now one little stock I thought we might have a look at. It's come up on my scanner a couple of days ago. It's called Australian Finance Group. Not that I've really ever heard of it, but there it is. It's just simple cycle behaviour of stocks and how they go. You know, we have downtrend, we have accumulation, we have uptrend, we have distribution, we have back to downtrend and accumulation. So the cycle goes on, and the part of the cycle that we're interested in is when it goes from accumulation to uptrend, and we hopefully get an uptrending move and a trend for us to follow. So in this situation here, we've got the downtrend here, we've got the accumulation phase. We've got the accumulation phase here with some slightly upsloping lows here, which is a good sign that demand is better. And now we're starting getting push through this level here, which is up around 180, 185. And we're starting to get a bit of volume here. If I just sneak this up a little bit, You can just see here we're getting a bit of volume come through here. We saw a bit of selling come through here, but it's still held at these higher levels, which is good. So all the construction of this price is sound. And now we're getting some buying come back into the market, and momentum is picking up. It's above the average, and now we're starting to break to new high, which we're now going to get new high highs and high lows, which defines an uptrend supported by these indicators. So if I was to run a trend intensity indicator over this on a break here, you're probably going to get an 8 or 9 or maybe even a 10. So that's just one for you to look at. It's a smaller stock. Be careful. Make sure you work with your stops. But it's an interesting one for you to have a look at. Okay, so that's all the stocks I've got for you today. Again, it is an interesting market. Our focus is on a small group of stocks. We're not too worried about the rest of the market that's going down or sideways, or having fallen off a cliff and had big dumps down. So we're just focusing on our main stocks that we know that are trending higher, and that keeps us more confident and more safe that price will continue to rise. Okay, so now we can go to trading tactics, and I talked a little bit about the trend intensity rating. A few people have rang up and asked me a little bit more, just to explain a little bit how it works, because it is a very useful tool to us. It's a proprietary tool that I run myself. I've run for years. And it's worked pretty well. It just gives me a few advantages, which I'll go through a bit later on. But the trend intensity indicator is made up of 4 indicators, as you know: price, volume, moving average, and also price momentum. Okay, so what it does, it grades and weights these indicators into one index, which gives me a reading of +10 to -10. Okay, and that gives me a gauge on how strong the trend is, up or down, or whether we're in neutral areas, things like that. So I have to have a trend intensity rating of +4 to give me a confirmation of any trend. It can be anywhere from +4 to 10, and if it does that, then I'm on that stock. It standardises my analysis. Okay. It also which does provide consistency. So if I'm standardising things, I'm not changing or looking at different things. I'm looking at the same picture each time, which gives me that the consistency in my results, or my outcomes, or in my trend qualification. It gives me perspective. Sometimes I can get a bit excited about what might be happening, but the trend intensity indicator might still only be -5 or something, saying, well, maybe I just need to hold back a little bit and not get too excited. And we can get excited and we can get fearful. It's a natural human behaviour. And what this does, it takes that emotion out and gives you a perspective view. And a weight of evidence view. So as you can see before there are a couple of stocks that's a bit thin on the volume side, but we've got rising prices, we've got above the moving average, momentum is okay. And so we just look at a weight of evidence. Not everything has to be exactly right. It really is more than less, or sort of more often than not. So it's just really giving me a picture that supports the analysis that we do. So that's a trend intensity indicator. Okay, just going through the indicators themselves. Price, basically, if I have higher highs and higher lows, that gives me a positive value into my trend intensity rating. If I have lower lows and lower highs, I have a negative value. And you can see here, I've got higher highs and higher lows. So that will be giving me a positive rating. Okay, so there'll be 4 figures that will go into my trend intensity rating, and it grades and weights these indicators into one value. So that's the price, which is probably the most important thing, the actual price trend. Then I have moving average here. If the price is above the EMA, which I use an exponential moving average, which is just weights things more to the more recent price action. So if I've got a 28 period exponential moving average, the biggest weight will be the last value, and the smallest weight will be the first value. Okay, so if the price is above the moving average, this is all very simple analysis. It's really giving you a good simple perspective, because we can complicate things very much in our mind. So if it's above the EMA, I get a positive value. If it's below the EMA, I get a negative value. Simple and easy. Okay. Volume is the same. If volume is expanding, you can see how it's expanding nicely on this rising price and above the average. I give it a positive value into my trend intensity rating. If it's contracting, it will get a negative value. Okay, so that will happen even if the price is rising. The volume may not be so strong, which makes me wary. But if my bigger picture of all my indicators says positive, I still stay with the stock. So I'm not basing anything on one single indicator. Okay, although volume is quite important. Then momentum is the last one, number 4. Okay, momentum. So I use an MACD, moving average convergence divergent indicator. You can use momentum. You can use There's different. There's quite a few different momentum indicators, stochastics, and things like that. But basically, for the momentum index, the MACD, there's a zero value, and there's a couple of lines that we have, a couple of moving averages that work together. And you can see down there, it's above zero. It's above the zero line, and the lines are expanding. And there's a couple of different variations, but basically above the zero level will give me a positive value, and below the zero level will give me a negative value to put into the trend indicator. And there are levels of positive and levels of negative, which is a little bit more complex for here. But I'm going to show you a little link to a part of the site that will explain the trend intensity indicator completely for you. Okay, so that's a momentum indicator, which is the fourth one. So what we do is we get the complete picture. These charts are from the evolution chart and what we've seen recently. Our objective, the complete picture, our objective is to identify and follow trends, nothing more and nothing less. That is it. Okay, and we use these 4 indicators only. So it's a simple world for me, and that's where I operate. It's very black and white. It's yes or no, and that's just simply how I work. It makes my life very easy and very simple. And you can see there the link there to Stockradar Trend Intensity Indicator. In the About section of Stockradar, there's a lot of stuff there explaining a bit about how I work and some of the other things that I use. So you can see here with evolution here, it gets a trend intensity rating of 9 out of 10, which we saw before, because the price is going higher. It's above the moving average, the volume is expanding nicely, and momentum is also very bullish, rising and also expanding those lines, which is very, very strong. I mean, the short-term bulls are stronger than the long-term bulls. Okay, so there's a very short-term not a short-term, but a power move that's going on. So you can see that with the momentum indicator. So that's the complete picture that we look at. There's those 4 indicators to help me, guide me a little bit further than just the basic Dow theory price analysis, okay, of new highs and trend reversals. Okay, so that's about all I've got for today. What's happening at Stockradar? Well, the newsletter was out last week, fairly extensive there. I talked about that. You can take a free trial, follow my signals, follow my stops, how I adjust them, how I move them, because that's really the main part of my site is risk management. It's all very well to give you stocks that are trending, but you also must be able to protect those positions with a stop loss, a risk management stop, something that is the risk profile that suits you, and you work with those things. So you can see how I do it on the trading center. You may vary what I do, you may follow what I do. It's really up to you, but it's a guide, it's a process. It gives you an understanding of what you need to do and the information you need to trade based on trends and stop losses. Okay, so in the in the trading center, look for all those stocks in the neutral zone because they're the ones that are likely to break up into the green zone. Okay, so that's about all I've got for you today. Fantastic market at the moment, and miners are going pretty well. The US market's recovering a bit, whether it continues on or not, under this wild President Chaos Theory guy. We don't know, but who knows what's up his sleeve at the moment. So the trend intensity indicator, which I've talked about today, is a great way to go and put consistency into your trading approach. It provides great perspectives and helps you put you in control of what you're doing, rather than sort of hit on this sort of style. Okay, so that's all I've got for today. Watch your trends, hedge your stops, keep it simple, have fun, stay safe, and I'll see you all again next week. Thank you.